It's early July 2020. We're here to talk about the Toronto real estate market. Is it a good time to buy? Is it a good time to invest? Or is it a better time to sell? I'm Brandon Ware, broker of record and founding partner of Verity Real Estate. I'm here with my business partner, Christian Matthews, and Jason Lang, one of the founders of Outline Financial, mortgage broker, stats guy, and love chatting with you guys because there's a little banter about where we are. So let's dive right into the facts, right into the figures. And we should probably start with what the Toronto Real Estate Board is talking about, what's happening across the entire GTA. So I'm going to pull up and share the market synopsis that they present to all realtors every single month. And what we have right here is that report. And you can see, if I were to zone right in, or rather zoom right in, you can see at the bottom right-hand corner what the media is picking up on this right here. Sales for the month of June 2020 over 2019 plateaued. We're seeing about a 1.4% decrease in the number of sales. New listings about the same, a slight increase. Active listings, so the supply is down about 28%. And as a result, home prices are up almost 12%. And that was all the headlines the last week or two about how the Toronto real estate market has come right back to life in a big way. I think, Christian, you're seeing that very much in the east end of the city. Lots of bidding wars happening in Leslieville, Riverside, Riverdale.
Yeah, I mean, we're faced with basically no inventory whatsoever. So that's what's driving the market over here on the east side. I'm sure we'll get into the stats a bit later, but there's just nothing to bid on. So that's just fueling bidding wars over the past, I'd say, 3-4 weeks.
Yeah, it's surprising when you tell me about some of these bidding wars, because I never would have thought that we'd be where we are today and still seeing them, given this section that I've highlighted over here on the left, which are the economic indicators. We've got GDP growth is down. Toronto's unemployment's up at just over 11%. I mean, there are a lot of headwinds that I think the economy on the whole faces as we move forward out of this. Or, man, we're still in the midst of this pandemic. And I should probably even say, we're not here to convince anyone to buy or to sell. We're just here to present the facts and talk about what's happening, not across the entire GTA, but in the specific core downtown pockets, because that's where we do a lot of business. Jay, I know that your company, you guys, Outline Financial, you're doing a lot of work all over Ontario, for that matter, and we'll talk a little bit more about what you're seeing later on. But let's dive back into the downtown core and some of these facts and figures. And again, gentlemen, feel free to chime in if you see something different than what I've been seeing lately. But I think we're all on the same page, which is sales have plateaued. But in some sectors, we're seeing a little bit more supply come to market. I think that's a fair statement.
And just to interject just before we move on from the June stat, I think one very interesting thing is, we saw sales down 1.2%, I believe, and then new listings up 2.1%, give or take. I mean, if you look back at May, I think sales were down over 50% versus the previous year in May, and in April they were down over 60%. So, it's incredible to hear we're back to a point where there's multiple offers, considering just 2 months ago, we were looking at 50 to 60% less sales and less new listings. So, interesting to see how these stats play out. And if June was just a rush back to the market, or if it looks to be something that's sustainable.
Yeah, I would agree with you. I think in April and May, we were told by the government, don't leave your house. Like, right. Don't do anything unless it's absolutely essential. And, we were all on our best behavior, or at least most of us were, and we did that. And thankfully, the virus is seemingly under control. Whether or not we get a second wave remains to be seen. I mean, we all hope that we don't. But I think it would be really detrimental to the economy on a whole if we did get forced back into what we're seeing in the US now, which is a second wave of rollbacks of economic opening. Anyway, lots to talk about on that there. Where we're focused, though, is the downtown core. So this map here shows anywhere from the beach, East York, up through Lawrence Park, the Junction High Park, and then down over towards New Toronto, Mimico, that area there. And the reason we're focusing in on this is it's much more densely populated than the entire GTA. I think what happens in Burlington is interesting. What happens in Mississauga, Brampton, Newmarket, Scarborough, but we're focused primarily on the downtown core. So looking at those areas there, I mean, it's amazing that, Jay, like you said, we're still seeing price growth across all home types, and this chart reflects that.
Yeah, absolutely. I mean, I think if you look year over year, you're seeing the the increase, and we can dig into the details to see what's the mix of sales in terms of price point. But even if you look over longer term, look at 5-year growth rates or 10-year growth rates, you can see the Toronto market, depending on property type, has been running anywhere from 7 to upwards of 10% compounded annual growth for the past 5-10 years. So tremendous equity buildup. I'm sure you're seeing, you've seen that with your clients. It's just, yeah.
I totally agree, and I think that's a really valid point. The idea that if people did have to sell, or if they were forced to sell, that this assumption that they would automatically be underwater, that they'd be losing money. And I think when you look back at these growth rates, like over the last 10 years, condos have been appreciating annually at 6.6% in this area, this district that we're talking about. That's like annual return. I mean, remembering that some people would have only put down $40,000, $50,000, $80,000 on this purchase, but are seeing a 6.6% annual return on the value of the property on the whole. I mean, that results in a huge appreciation or return on investment annually over 10 years. I mean, I use myself as an example, and Christian and I were talking about this earlier today. I bought a condo 6 years ago over at Queen and Broadview, and I took a chance on it. It was a new development at the time. It still is. It's just coming to completion now. I paid $500 a square foot for it. In today's market, it's probably worth $1,000 a square foot. So even if there was a correction, I'm not saying that there necessarily is going to be one. I'm just saying, even if there was a 5 or a 10% correction, and I had to sell that in 3-4 months for $450,000, I bought it for $250. So, there's it's really the people who might have bought 6-12 months ago and paid market value at the time. If they've lost their jobs, there could be some problems and some challenges there. So this chart here that you're seeing, this is internal data that we have, we provide to our clients, and we have it for all the different areas in the downtown core. But what you're seeing is average price growth over the last year. I mean, still up over this time last year, anywhere from 1 to 16%. And if we scroll down to the rolling 12-month average, where we've smoothed out these seasonal fluctuations and ebbs and flows, because there are seasonal fluctuations, things tend to be a little bit hotter in the spring, maybe not this year, Christian. We've talked about how the spring market is now the summer market.
Yeah.
When we're smoothing out those seasonal fluctuations, we're still seeing.
Can the winter be the fall? That would be nice. I would like that.
I'm afraid of my inability to getting outside in the colder months this year. But again, looking over smoothing everything out over the last 12 months and averaging the growth, the price growth, we're still seeing pretty solid return on investment here. I think most people are very, very happy with these based on their down payments too.
When I look at these numbers, it just shows me how resilient the Toronto market has been every year, and everyone doubts it, and we hear the media, and it just every year, even with the pandemic. I mean, the numbers are just staggering. I'm always amazed at how well we do that in the Toronto market.
Yeah. But Christian, I mean, the other thing is you do so much work in the east end of the city, and I'm not saying that the market is sunshine and rainbows 24/7. I mean, I see certain areas that I think are overpriced more than others. But I mean, in Leslieville, Riverside, Riverdale, I mean, throughout this entire pandemic over the last number of months, you've been commenting on how it's still been bidding wars, it's still been multiple offers. And again, we'll touch on that, but that hasn't really changed that much, even where we are right now in July.
No, I mean, I read something about a month ago, I think, or a month and a half ago, where I think Leslieville was one of the top neighborhoods that had done well during the pandemic. I think I remember seeing double-digit growth year over year, I think, for May, which was incredible. So it also goes back to with supply. There's very little supply in the East End, whether it's Leslieville, East York, and where we're going back to E1, E2, E3. The numbers are very low, which again pushes the price up and has us doing very well.
So let's talk about this. Sorry, Jay, you were going to say.
Oh, I was just going to say from, on the mortgage side of things, we get firsthand knowledge of what's going on the demand side. That's the phone ringing off the hook. People saying, is there an opportunity for me to buy? I want to be ready to buy. And throughout April, May, our phone was still ringing, people getting ready. So we could feel that there was this pent up demand. And, I think what has kept the market in balance is that the listings stopped as well. So you've got this pent up demand with, not a rush of listings, and they've both sort of come out together. So we're almost having an orderly coming back into the market, if that's the right way to say it. But definitely there is demand there. People are excited about owning a home in Toronto, and yeah.
It's really interesting that you mentioned that you guys were getting phone calls, meaning Outline Financial, you were getting phone calls in the midst of the pandemic, because I was getting phone calls 3-4 weeks in to the lockdown where I'd have clients calling and were opportunistic buyers saying, okay,
Yeah.
let's buy. What kind of deal can I get? And at that point, like you said, listings had gone down almost in tandem with sales. So if you were still shopping, you were shopping from the same relative pool of available inventory. So nothing really had changed. But now as we're emerging from that, we are seeing some differences.
Yep.
And we'll touch on that next. But let's finish off here with the average price. And again, seasonal fluctuations, you can see that. This right here where I put the 2 red lines, this is in 2017 where things kind of leveled off. We saw continued growth in the condo sector, but here's the pandemic when we were locked down. And this is the month of April. And you can see across all home types, the average price dipped. And I think a part of that was just only people that were really forced into a situation where they had to sell that month were the ones that were selling. And there was so much uncertainty at that point. Like we really didn't know. But you can see right after, the month right after, which was May, and then subsequently June, that home prices jumped right back up. So we haven't seen that correction that I think a lot of those investors that were calling me, and that might have been calling you, Jay, and yeah, Christian too, they don't exist yet. And yet is the big caveat there, right? Like what does the future hold? So let's jump into sales, new and active listings, because what this is supply and demand. And again, in the downtown core where we're doing a lot of work, what we're seeing is across all home types here, detached townhouses, the number of sales for the month of June this year over the month of June last year were up. So more transactions happening. In the semi-detached and the condo sector, we saw sales activity go down. And again, still over the course of the last 5 years, we're seeing, where do we stand? I mean, we're still not at a point where I'm like, oh my God, alarm bells, everyone freak out, like sell, sell, sell. That's not the case. I'm just saying we did see a decrease in the number of sales last month in a couple of different home categories.
Yeah, and I think, as mentioned, we transact business across Ontario, so we see sort of a bit of a broader picture. If you look at sort of the 905, the 416 in general terms, kind of the core 416, I guess, condos in general have slowed a little bit in terms of the number of sales. Well, I'm sure, I think you're going to show next, the amount of inventory, is starting to build a little bit. So while the other categories seem to be in balance, maybe there's some signs where condo sales slowing down while new listings continue to, rise, may create some excess inventory.
Well, thank you, Jack.
Segue. Yeah, there you go.
Segue into new listings, which we would expect. We talked about new listings and how the spring market got pushed into the summer. So not surprising from my perspective to see the number of listings increase last month, because again, we were in a holding pattern for, for April and most of May. So I'm not surprised to see new listings jump across all home types last month. But what is somewhat surprising is, you'll have to excuse my scribbles on here, but these are active listings across all home types in these districts that we talked about before. And detached homes, the amount of active listings or supply at the end of the month was down 15% over this time last month. Townhouses were also down about 2%, where what's noticeable, or what's worth noting rather, is the semi-detached and the condo segment of the market. We saw a decrease in the number of sales, but we saw, especially with condos, a pretty significant increase in the number of active listings. So that might result, if this trend continues for another few months, we could be into a situation where prices really do start to level. And again, these are a whole lot of ifs and possibles that we're throwing around. We don't know right now. Like, we're gonna see what happens as the economy starts to ease some of these restrictions. Right now, we're not getting the immigration. That's a really big one that's affecting the rental market, which is down anywhere from 5 to 10% average prices over this time last year. And I think that there's more downward pressure in the rental market. But going back to this, sale market, if you will, we've got the condo sector, which is showing some signs of just slowing down from that breakneck speed that we saw earlier in the year.
Well, actually, just while you're on that slide, if you look at the active listings, so there was 2,048 condos at the end of June which was 23% higher than, say, the normal June over the past 5 years. But a normal June has been running at 8.8% compounded annual growth rate over 5 years. So, it's some balance there. I mean, I'm more of the numbers guy. I mean, you're dealing with the clients every day. I mean, what do you see? Have you been like, was it hard to find condos for your clients over the past 4 years or 3 years?
There were certainly times where I would say to people, okay, I'm never going to force you into buying anything ever. But when you see something that you like, you're going to need to be prepared to make a decision fairly quickly to avoid getting into a bidding war. I'm not pressuring you. I'm just saying, if you wait 2, 3, 4 days, it's probably going to sell. Good condos, good locations, good buildings, absolutely. And houses, bidding wars have been the norm I've been selling for almost 16 years. I mean, with very few exceptions, credit crunch in 2008, 9. Even during that 2017 blip that we had in the downtown core, I didn't see this supply demand dynamics didn't really ever shift so much that it deviated away from a seller's market. So right now, though, I am seeing a situation start to present itself where investors and especially first-time home buyers that are looking at real estate from a long-term perspective, where it's like 5, 6, 7 years, you're going to hold for that long. There are some opportunities now. But again, remember that even the people who are trying to sell and who are not getting these ridiculous numbers on some of these condos, they're still doing very, very well. So it's not as though we're in a situation where it's like, oh, geez, I'm losing a bunch of money. No, it's like you're not making 250 grand or 500 grand. You're making $200,000 instead, or you're making 450. Like people have still done very, very well. Yeah. I'm not seeing a mass exodus that's resulting in huge decreases even in the condo sector. I think anything that deviates from a seller's market where it is bidding wars is almost deemed or considered as a failure from a seller's perspective, because it's always been like, oh, it's going to sell and we're going to get 3 offers, and that's going to happen within the first 36 hours that we go to market.
Yeah. The numbers, like Jay mentioned earlier, it's so large for the number of active listings, but I'm curious to see how that works out going the next 2 or 3 months, whether that's a rush if everybody put their property on the market right away, and if that tears off a little bit. So it'll be interesting to see how those numbers work out. And then to go back to your point, Brandon, I think if you saw the condo that was very well presented, you had to jump on it right away. And I think with this new inventory being a bit higher, it gives our buyers a bit more time, I think, to look at certain units, because I think there's more out there. So you're not as rushed, I feel, right now with certain condos.
I would agree, but I would also say that unique condos with unique elements are still selling very quickly. I mean, a month ago, I got into a bidding, 3 weeks ago, I got into a bidding war on a wonderful unit over in King West that had a spectacular terrace. And this gentleman is going to live there probably 5, 6, 7 years, or he's going to hold it for that long. And that condo, first of all, he paid sub $1,000 a square foot for a terraced unit in King West, which is great value. Of course, building specific, neighborhood specific, but good properties still sell in a very short period of time, at least at this point in where we are in the market.
Yeah, I think those unique ones you mentioned, Brandon, will always have that allure, like large terrace or a very hard loft, whatever it may be. Those I find for my clients, those are the ones most sought after. So yeah, I think those will be kind of at the top of the list every year. We have this.
So speaking about things moving and moving quickly, I always get people who are waiting for that very much a buyer's market. And this is a 12-month rolling average of inventory levels in these districts that we just talked about. And my scribbles on the screen here, this is more or less kind of the balanced market territory. And this is where we are right now across all housing types. So we've got detached homes, condos, townhouses, and semis. So we're still very much below where we need to be in a balanced market. And again, this is the 12-month rolling average. Jay, we have another chart that we're happy to share with people that does show that the condo sector in these districts is actually, the months of inventory is actually approaching 3 months versus this time last year, which is again, much, much closer. So this smooths out those seasonal fluctuations. And the last time we were in balanced market territory for condos, at least, was 2012 through, what is this, 2015? And even then, when I reflect back on that period of time, we were still, condos that were well priced were still selling within 98 to 100% of their list price. I think the biggest difference right now is the numbers that I saw some sellers get back in January to February of this year, at when things were getting a little overheated, in my opinion. We're not there anymore, but they're still doing very, very well. And we're seeing a fairly sharp increase here in the months of inventory in the condo sector. So it will be interesting to see, do we start really climbing in a big way? And I think if we hit anything around that here, this balanced market threshold, it will just be like, whoa, sellers will say, what's going on? Like, I was expecting this to sell in 48 hours. And now it's like, well, no, it took 4 weeks and you still got a great number.
Yeah.
So, I mean, there's just a lot happening right now. And I think, Jay, on the mortgage side,
Sure.
what are you seeing? Because we talked a little bit about deferrals. There's been a lot of talk with CMHC, 15% of their portfolio deferring mortgage payments, and that's across Canada.
Yeah.
When you look at Ontario, I think it was around 12%, if I remember correctly. Your company, are you seeing a lot of people take on those mortgage deferrals in Toronto? Like, can you comment on that?
Yeah, I mean, there was an article that just came out today that's saying 1 in 5 people, well, 1 in 5 people, I guess, are or is it 1 in 5 taking advantage of CERB, but pretty close to the same as taking, advantage of the mortgage deferrals. So, essentially what that is telling people is they don't have to make a payment until, for 6 months, which could end up being September, October, November. So at those point in time, when people all of a sudden have to start making that monthly payment, if they don't have a job, then they're going to have to think about what are they going to do with their property. So I think there's 2 terms out there. People are sort of using deferrals and defaults interchangeably, but they're 2 different concepts. Deferrals is just, you don't have to make a payment because the bank allows you not to. And even CMHC and Genworth, they may have additional negotiation room to do it longer. But once you have to pay and you start defaulting, or you go in arrears, once you're past 90 days in arrears, then essentially you probably are going to be putting your property up for sale. The bank will want you to. They're probably not going to foreclose. So that's where we talk about inventory. Everything seems to be balanced, under control now. But when we start to get September, October, November, are we going to start to see some new forced listings? Are we going to get some properties coming on the market that otherwise wouldn't?
But even there, when we start talking about forced listings, I read an article that was talking about where a lot of the job losses have been incurred. And unfortunately, they have been incurred in sectors of the market like the frontline workers, people who work in grocery stores, tourism, airlines. I mean, these industries have been hit terribly hard. But I do wonder, like, how might that affect the Toronto market? Right?
Yeah, I think the estimate is over 5 million people have been impacted by either a loss of employment or a reduction in labor hours. So it's, I think, 3 million people lost their jobs, and over 2 million have reduced work hours. And actually, there's a great article about the impact of immigration, or the lack of immigration, on the housing market that TD just put out a couple of days ago. So it's making the rounds, but it does a great job of breaking down who actually is impacted. And if you look at who generally lost their job, it seemed to be more the young, like 16 to 29-year-olds were a large group that have been impacted by this the most. So, that's probably why, those are your renters, those are your first-time home buyers, those are your condo demand, those are your, so it's over time. If you have this bottom of the property ladder that can't get into the market and drive that, then over time it will potentially could trickle into the rest of the market. And actually, literally, it's good timing, because TD has an article on that right now.
Yeah, I'd be really curious. I haven't read that article, but I have been commenting on the lack of immigration. When you look at the number of people, or perhaps the lack of people that are coming here, it really is reflected very much in the rental market. I mean, I think a lot of those absorptions were happening by international students, which they're not coming right now. The newcomers to the country, which make this country incredible and absorb a lot of the housing and contribute to the economy. I'm like, they're not coming right now. They will eventually, but not, I mean, is that 6 months? Is it 12 months? And how do we weather the storm in between? So the rental market, as I had commented, is down anywhere from 5 to 10%. I think that those average prices might even decrease a little bit more. Remember though, that a lot of these investors they didn't buy a year ago at $1,200, $1,300, $1,500 a square foot. My opinion is that some of those people might be in some hot water in the future if we don't get back on track. But right now, people who bought and paid $700, $600, even $800 a square foot probably can weather a 5 to 10% reduction without a huge decrease in negative cash flow territory for their investment properties. But yeah, there are just so many unknowns right now. I think anyone professing to know exactly what's going to happen really doesn't know. Even John Casalis, who is fantastic, wonderful information that he presents. I've heard him say, like, I don't think anybody called this market right now, and he's doing his PhD in housing. So it's very hard to forecast what the future holds. But we did talk about how there are different different people driving different segments of the market. And I'm just trying to pull up right now, and hopefully my screen shares. And if it doesn't, I may have to try it again. But just the different sectors of the market and how that is, oh, that didn't work out. Let's try one more time. Just the different categories and the different changes in the number of sales and the price appreciation in the categories. So here we go. So wonderful chart talking about, now this one here, detached home sales and the different price categories. So we all know it's very, very difficult to get a detached home under 600,000 in these central districts. But if we start moving up and we skip over that just to the $600,000 to $1 million price range, you can see that the number of sales and the average price kind of went up the same for the month of June over last year. But this is where it starts to get interesting. $1 to $1.5 million. There was a 9% decrease in the number of sales, and the sales more or less plateaued down about 1%. But this is really interesting in driving these price gains. You know, in the $1.5 to $2.5 million price point, a 28% increase in the number of sales in this category. Prices remaining the same, but then a 10% increase in the number of sales in that $2.5 million plus, and a 10% increase in the average price. So those are some big changes there. And then the condo sector in these TREB zones, I mean, again, the number of sales down in a few of these categories, kind of hard to take this 2.5 million north with only 6 sales in a category. They can probably skew those statistics quite drastically month over month. But we're not, I mean, across the board, the average sale price kind of just leveling off for these different categories in the downtown core. So like you said, I think it'll be interesting to see what happens in the coming months.
I've got a question for both of you, actually. Looking at that chart, obviously you had the higher priced homes selling faster this June, or selling more this June than they did last year. Do you see that was just basically demand that was sitting there, or sorry, supply that was ready to go out to market and didn't go out to market in April, May, or is this a sign of something, a change in the market, or what's your take?
I mean, I think there's been a lot of talk about, you know, people wanting more space, but I think also you have to look like $2.5 to $5 million. I mean, it's a limited. Those people aren't selling if they don't have to sell, right? I have a few people in that price point, and you know, they've got a home for sale. I've got a client who's got a home for sale in Thornhill. He's like, you know, if I hit my number, great. If I don't, I don't. Like, I'll try my hand at it next year. But I think that some people were longing for a bit more space, and that may have expedited or you know, been the catalyst to them maybe making a move up a little bit sooner, just so that if there was a second wave, perhaps they had a bit more outdoor space, or they had you know, a bit more space in their home if we end up getting locked down again. I didn't have too many people move out of the city. I had one couple, they sold both of their condos and they bought a place in Kingston, but that was planned. It's just that it happened about a year sooner because they were like, okay, we're going to work from home now a lot more often. Let's go now. Christian, I mean, are you seeing anything in your neck of the woods?
Yeah, on that higher price range, I actually had a buyer and seller, the same group. We managed to buy a luxury property in Queen West that was listed at was purchased last year for 2.775, and when the pandemic first started, it was crickets out there. Nothing was happening, so we put a bid in at $175,000 less than what it was purchased last year, and we got the property.
Wow.
Now, we had a long closing, so we were able to sell his property in Summerhill just a couple weeks ago, above 2.5, and is sold in 1 day.
Yeah, I was going to say that's off the shelf.
So to answer your question, Jay, I think like that buyer that bought the Summerhill home was waiting probably for 2-3 months for the properties to start coming out. And when it did, they just pounced on it right away. And we had a lot of showings in 2-3 days at above 2.6 million. So
wow.
they're out there.
Yeah, I'm surprised that some homes that I think are going to sell really, really quickly linger, and then other homes that I think might be a little bit harder to sell end up flying off the shelf.
Yeah.
So sometimes it's all about timing too, right? The right person looking for the right property. And again, with a long-term horizon, meaning they don't need to sell in the next 5 years. They want to call Toronto home. It's like whatever happens over the next 12 months or 18 months, if you're going to live there for 5 to 10 years, I don't want to say it doesn't matter, but it doesn't matter as much because you're going to live somewhere. The question is like, is it of good value and do you see it? So Christian, let's talk before we finish off about my new development comments. Let's talk about your neck of the woods, because again, you do a lot of work over in Leslieville, Riverside, Riverdale, and I'm seeing this whole area it's red hot. Like you're on fire over here.
East Side's where it's at. You gotta live here. It's science. Where to be.
So here we are, Leslieville. So what are we seeing? I mean, let's just skip right down to the chart, because look at this. This is mid-pandemic.
Yeah.
And like detached home prices jumping. Like all home prices jumped. It's crazy.
That's a bit misleading because there was only a few sales in that, so it does spike up and down. That's where I love the rolling average. But there was just a lot of pent-up demand over here in the East End, and especially Leslieville. And there just wasn't very many properties on the market. So we just had a lot of buyers bidding for very little inventory, which kept pushing the pricing up. And I'm sure you'll get to the chart where it's months of inventory.
Yeah, let's scroll down here. I know there's so many charts and graphs that we have to try to make sense of everything. But I mean, at the end of the day, this is the months of inventory in the east end of the city. So in Leslieville, Riverside, Riverdale. And it's like, wow, look at this.
Yeah. Mm-hmm. That's why it's important to go over each neighborhood specifically, because they're so different from the average GTA stats. I mean, 3 of them underneath 1, and that's why the pricing has been so good in Leslieville and in E1. There's a lot of people that want to live here, and they just have nothing to choose from. So bidding wars have been around here for probably the last 6 weeks.
I think I was looking at the Market Watch report, and the sale price to list price actually got down a little bit in the east, but it seemed like it was back to 113% in June for detached properties. So it's like, it got down to about 104, 106, I think, but I saw in June 113%. So I guess that's pretty much like par for the course, I guess, right? Yeah. if you're transacting out east. Yeah.
So here's my last question. If either one of you was in the position to be buying new construction right now, of course, for the right price, I would happily buy. Based on some of the numbers that we've seen for some of these new projects that are coming to market, would you be buying?
I'll jump in. So it depends on the buyer. Myself, I wouldn't do that. I would more go towards the resale. I think the price for a new development is a bit inflated. Again, it depends on what your goal is. If you're an investor and you're buying the unit and hoping to be able to rent it out in 3-4 years, I think the way the rental market is going now, that may be a bit of an issue for you. But if you're an end user and you're going to live in it yourself and you're going to hold it for say 7-10 years, new construction might be the way to go because of the way the deposit structure is. but I still like buying a resale because I know the market today. So I know what I'm getting into. If I am going to rent that property, I know the rental rates for today. But I feel like I have more control over a resale as opposed to new development.
And I mean, Jay, when you talk about new construction versus resale, I mean, resale, you do have the advantage of getting some pretty low rates right now.
Yeah, it was funny. I was going to say, would I consider buying a new condo? I was going to say, well, I definitely get a pre-approval. I'd confirm how much I could afford first, because that's critical. But once I knew how much I could afford and how much I could go up to without asking, because I have family and friends that want to help me out with money too, because it's a dinner conversation we never had, but we're going to have, because they want to know that I want to buy. Anyway, I digress. But what the heck was the question?
Would you be buying? Jay's got too much on his mind. Would you be buying new construction right now based on the numbers that you've heard thrown around? $1,200,
Yeah.
$1,300+ a foot.
I think it is. It's a pretty risky. It's a pretty risky proposition right now, I think, to go a new build route, especially when you have this uncertainty in the resale. I mean, for how long has the media been telling us condos are going to crash? Condos, and we're not saying, I'm not even using that word now, but call it right size. It may be a time when the condo market gets to take a breath. And if what Christian was saying, if you know exactly what you're going to have to pay, your condo fees, the building's history, the condo corp, how solid is it? What's the status certificate like in the building? I mean, that's all unknowns when you go into a new build. You don't know how the project's going to be managed. You don't know if it's going to be all rentals, if it's going to be end users. You're taking a lot of risks when you go down the new build. You get a nice shiny apartment when you get the keys, but there's something to be said about having it right away. You're starting to earn rental income day one, or enjoying it from day one. So that's, I think we're going to be coming into a unique time where it makes a lot of sense to at least keep your eyes open and be watching what's coming on the market.
Yeah, I would agree with you both wholeheartedly. I'm not super keen on most new construction projects throughout the city. I've personally bought into them. I've had a number of clients buy into them, and I'm still seeing opportunity. I just think that you need to look beyond the hype. Don't necessarily assume that what you did in the past is going to be replicated in the future, because in the past it was like, well, it's really expensive now, and well, everything's expensive, and yes, you bought here and the market went to here, so this is all your profit. But right now, it's like you're paying 20-30% more than the resale market, when the resale market may be plateauing or could potentially plateau. And I think there's all these other hidden costs. They're not even hidden. They're just these additional costs that I think people are surprised, whether it's, paying your HST and then of course applying for the rebate, getting it back, but it is money out of pocket up front. Development fees, interim occupancy fees. And when I hear numbers thrown around where they're like, well, these are 2018 pricing, or this is, you're going to get $8 a square foot in rent. And I'm like, where? Like, those are huge numbers. And what's the rationale behind that? Because again, immigration will come back. And when that tap is turned back on, I feel confident that a lot of absorptions will happen. But over the next 6 to 12 months, right now, there may very well be an opportunity to get something where it makes more sense to be buying, taking advantage of these rates that we're getting. Even in a market where rents are down, you know what you're getting yourself into. But once again, I want to drive home, for the right price, I would buy new construction. And I think it also has to be what works for you. The final thing I'm going to say about all these things that are happening right now is Christian and I have talked about this, and Jane, I'm sure you and your company advises people in the midst of this pandemic, have a contingency plan in effect. I think it's really, really important to understand that if you are buying real estate or investing, what happens in 3 months or 4 months if we are in a situation where we are locked back down again? Like, do you have a little extra buffer, more so than you might have had in the past, to weather that storm? What happens if you are laid off, or even laid off for a short period of time? Like, I think now more than ever, it's just have your finances, have that conversation with outline with you guys first, just so that people understand some of the challenges that may exist. Because I think now more than ever, we're just in a situation where people's employment can change overnight, in a good way or in a bad way. So have that conversation with your realtor or with your mortgage broker in advance, because I think it's really, really important to understand moving forward. So maybe we should wrap it up there. And next month when we dive into this, I'm sure that there'll be so much more for us to discuss. So I'm really looking forward to it. Thank you very much. And gentlemen, I look forward to next month's.